Morning, Steve Free in Chicago with the morning grain comments. Overnight beans are a little bit lower. Corn's about unchanged. Wheat's a little bit higher. Outside markets, crude's up. Again, there was talk that OPEC will kind of stay close with their production controls, which is helping crude oil prices. And looks like the stocks might open a little bit lower, given all the drama that's going on in Washington this week. As far as the beans are concerned, U.S. imposed tariffs today on China. There will be, hopefully, negotiations next month on the additional tariffs the U.S. may impose of another $260 billion. And we'll just kind of see how all that plays out. As far as U.S. is concerned, it's going to be wet over the next 10 days across most of the Midwest. Historically, about 14% of the corn is harvested by now, 11 last year, and beans usually 12% versus 10 last year. So we'll see what the USDA says today and see how much work actually gets done over the next couple of weeks. We've got the USDA on Friday. They'll give us end-of-year carryout numbers for corn and beans in the first quarter, stocks number on wheat. Most people think that carryout and beans will be close to the USDA's number, while corn might be just a tad lower. Wheat is always the strangest report the USDA puts out because the implied feed usage comes out bigger than what we feed during the entire year. So that number could be a little interesting. We did see that open interest declined on Friday, suggesting short covering by the funds. And in the corn especially, funds are beginning to, these are more index type traders beginning to buy corn because it's cheap and relatively speaking, especially versus stock market, which is making new highs. So all in all, I think that beans are trading the fact that the tariff wars intensified today. And I think the corn market is watching pretty closely the final yields and how much farmers harvest given the record demand and how much they're going to sell. And in the wheat market, we're still trying to find a bottom in the wheat market because of the lower world production this year. But two things. Number one, we need exports out of the United States to push prices up to the upper end of the trading range we've been in for almost a year. And the other thing is that if next year all these countries have normal crops, wheat prices probably won't be able to rally too much. As always, these are my thoughts and not those of ADM or ADM Investor Services, and have a safe and profitable trading day.